please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Is where the opening is, so that's tying in with what the pre-open indicated.
There's absolutely no truth right now to this information that we have read in the morning.
We remain overweight on IT. It has already outperformed. The valuation gap has narrowed.
The anchor book is 45%. And the qualified institutional book is about 75%.
I think the government is on the right path. We are the ones at fault.
The market is disappointing to say the least. We're down about 35 points.
You're very close to 10,000 mark as well, so maybe there's a possibility of a short covering bounce, but any rallies in this market essentially would be short covering bounces. Overall, keep watching the mid-cap space. That's where the problem is larger.
Right, Dalal Street follows the sell-on rally template. Nifty ends at the lowest point of the day, while Sensex just about holds on to the 33,000 mark. Bank stocks underperform, led by SBI and ICICI Bank. Mid-caps disappoint, dragged down by leveraged stocks.
European markets trade weak and Asia has a choppy day post the Fed rate hike. Global markets remain on the edge ahead of a likely announcement from the US on tariffs against Chinese imports.
Crude prices touched 7-week highs, rising 10% from March lows. ONGC and Oman offshore gain, while oil marketing companies bear the brunt.
Sun Pharma gains on the back of a much-awaited US FDA approval for specialty drug. The drug is expected to rake in about between $300 to $500 million annually in peak sales.
The rise in alumina prices drives stocks like Nalco, Hindalco and Vedanta up in trade. Nalco rallies nearly 7%, Vedanta gains over 2%, while Hindalco gains over 1%. Those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talk Back, the show where we tell you all about 8 hours of hectic trading in just 5 headlines. I'm Lata Venkatesh, and with me my colleague Prashant Nair. Hi, Prashant.
Lata, hi. Nothing good to report in a way for the
bulls,
markets,
yes.
for the bulls, absolutely. I mean, down 40 points. We will discuss the top 5 market stories which define the day's trading action in the next 30 minutes, as always. Our market experts will take your questions, which you send in as well. To help us do that, we have Prakash Diwan joining in, and we have Mitesh Thakkar on the charts. Gentlemen, thanks very much, both of you, for being with us here on the show. But before we do that, as always, let's quickly wrap up the day's trading session. And I think another disappointing day, gains, nothing like yesterday at the high point, but still, I mean, we ended about 100 odd points off the day's high, and we ended the day's lowest level. Lata.
We could blame it partly on global cues. Even if the Asian markets and Wall Street appeared to have negotiated the Fed's expected hike and slightly higher than expected hawkish stance very well, the street is not negotiating the coming tariffs with the same, equanimity. You can see that Europe was troubled and that kind of rubbed on. One doesn't know how much the tariffs will be and on how many products and what will be the retaliation. So markets are sagging globally. But I don't think we needed Trump to bring our shares down. Indian shares were falling on Indian worries, and at the core of the problem are two, perhaps. One, the banking system, where, it's a death by 1,000 cuts every day. You worry that there will be credit risk aversion, the worry that the government has asked all failed cases to be tested for fraud. So, a risk aversion on the part of bankers, and a mid-cap that was seriously overvalued in the rah-rah months of 2017, and people wanting to dump but no exit route. So that's the core of the problem, which is taking mid-caps down day by day. But who were the specific candidates you would point to?
Lata, so public sector banks and Bank Nifty essentially top of the list. It has been that way for a while now. IT, which essentially has done well this year, and especially in troubled times, it has stood out. Well, that index was down 1%. Real estate index was down 1.25%. And then you throw in an auto and a pharma, and the list is complete. So banks, auto, pharma, IT, real estate, well, that's essentially the top spots of weakness. In terms of large stocks which lost, oil marketing companies, HPCL, BPCL, I mean, basically between 3 and 4% cuts. SBI was down about 2.6%. Wipro was down 2 1/3. Maruti and Mahindra were both lower by 2% each, and we had something like an ICICI Bank which lost some sort of gains as well. Cipla and Ultratech were other losers in terms of large stocks. Broader market damage, I mean, across the board, but I guess you could, I mean, look at the names. Jayaprakash down 7, Balrampur Chini down 7, HCC down 17, Arcom, Vakaranji, Reliance Capital, Reliance Infrastructure, Jet Airways. At least through some of them, you can sort of, put through a thread of, generally smaller names, some weakness, financially weak companies, some of them having trouble with banks, etc., etc. Some gains in the broader market. So Nalco was up. I mean, it's been stronger over the last couple of days. Jubilant Food was higher, 3%. Steel Authority of India was up about 2%. And then you had something like a HOEC 4% gain, 5% gains actually. Oil India on the upstream side, and Crompton, which was up a little bit as well on volumes. Lata.
Fair point. Yeah, I guess the Brazilian news kept the aluminum stocks happy, and crude kept some of the upstream oil companies happy. And accordingly, you had airlines and marketing companies, oil marketing companies sulking. But there is a problem at the market level as well. So, Mitesh, first that question to you. How would you gauge the Nifty ending at the lowest point of the day? Are we spoiling for more losses?
Yeah, I think the key here would be possibly the Bank Nifty, which is very close to the support zone of 24,000, 24,050. If that breaks, I think the Nifty could not only retest the recent lows of 10,050, but also break below that. And once that happens, I think we can look at 97.30 as the next port, 99.30 as the next port of call. So in that sense, I think I'll be watching the Bank Nifty very, very closely, and 10,050 is the reference point for the Nifty.
All right.
Let's get some fundamental market opinion. Basically, Credit Suisse's Neelkanth Mishra is sounding cautious on the Indian markets. So we'll play that bite out. Sanjay Mukim of Bank of America Merrill Lynch doesn't think that valuations are in the buy zone yet. Listen in.
The sentiment by and large here seems to be quite cautious on India, that there's something wrong. See that is the issue, right? So the currency is looking a bit wobbly. The bond yields have spiked. The term premium, if you were an observer, and I've stated this now for the last several months, if you were an observer of the Indian economy, and if the bond yield and the term premium was the only thing you were looking at, you would say that there is a crisis brewing in the economy. Political developments, the concerns around the fact that there is uncertainty on how banking system profitability may emerge over the next 12 months. All of these are issues that people are grappling with.
I don't think valuations have gotten into a territory where you can comfortably ask for people to buy it. I mean, frankly, if you look at the Nifty, it's still only back to where it was in December, and in several mid-cap stocks on the mid-cap index, PEs are not even back to where they were in December. So yes, there is an anchoring bias. Market has corrected from the top, but I wouldn't say that we are in comfortable valuation territory just yet.
Okay, so not a very comfortable sort of, not a bullish view at all, and actually not outright bearish, but no real sense that people are excited to buy or anything of that sort yet. Okay, we get to the second big story of the day. European markets trade weak, and Asia has had a choppy day post the Fed rate hike. The Shanghai and the Hang Seng indices closed in the red, while the Nikkei and the Kospi managed to close in the green. Global markets remain on the edge ahead of a likely announcement from the US on tariffs against Chinese imports. We spoke with Jeffrey Dennis of UBS. We're going to play out a quick soundbite. I'll be right back.
A delicate situation in terms of U.S. yields and going up potentially, and the Fed tightening. But we actually thought the statement was a little bit less hawkish than anticipated, because we had thought they would come up with 4 rate hikes for 2018. In other words, the dot plot would move up by 1 rate hike, and that didn't happen. Although, of course, the voting was very marginal.
Okay, but then before long, it wasn't about the dot chart and how much Fed would hike, but the trade issues that is worrying the market. We'll come to that in a bit. The third headline from the markets today: crude prices touched 7-week highs, rising 10% from the lows this month. ONGC and Aban Offshore were up, I guess even Dolphin, on the back of the crude price rally, both closing around 2% in the green. However, high crude prices meant oil marketing companies and airline companies were under pressure. BPCL down 3.5%, HPCL 3%, IOC over 1%. What's the way ahead for crude prices? David Lennox of Fat Profits.
Look, certainly with the oil price, we do think that we're now moving towards the Northern Hemisphere summer, and we will be looking for a very strong drive season, given that the confidence that we've seen in the US consumer, the full employment that we see there as well, and we think that that does bode well for demand. It will come in stronger than the market's perhaps been expecting. So overall, we do expect to see a rise in the oil price in the near term, and we've seen trading in the very near term.
Okay, we've got questions now. Abhinav Prasoon is writing in with a question on oil marketing companies. He wants to know if HPCL and IOC are stocks worth accumulating at current levels. Prakash, what would you tell him?
Well, if the choice is narrowed down on just the two of these names, then possibly you could look at HPCL. The new refining capacities that have come up, and then after the new acquisition that they have, it's at least got some sort of a de-risking element in its business model. But oil marketing companies, by and large, would go through this, sympathetic move along with crude. So, the best time to buy is these days when it actually, they face that that weakness. But you have to accumulate. It's not like an open and shut case kind of thing. You buy and just sit on that for 2 years and money will happen. You would probably look at other players within that value chain. I keep on bringing this name up, and I'm sorry to sound repetitive, but instead of buying the OMCs, you could probably buy an EIL, which benefits much more irrespective of who out of the three go into capacity expansion. But any refining augmentation will help EIL in a significant way.
Okay, but there is another company that you can ask for in the same complex, and that's Aban Offshore. Vimal Kumar is asking a question on that. He has 100 shares of Aban, bought at 180 rupees, and says he has been holding it for 5 months now. Wants to know if he should hold or sell. 5 months, short-term guy looks like. Well, Mitesh, your call.
Yeah, so Aban still isn't showing any signs of a long-term uptrend. You can keep this as a trading stock, so as you rightly said, short-term pick. Close at about 185, 190. I think I would, whenever he gets a bounce, and I think crude is kind of doing well, so it might happen in the next few days. But around closer to about 185, I would expect or suggest him to sell out, because I don't think it will make money over the next few months. So clearly an exit.
Okay, clearly an exit. My sense is that it is the leverage in that stock that is killing it at the moment. We have to take a break on that note. But coming up, our experts will continue.
Here on Markets Today Talk Back, Prakash Dewan and Mitesh Thakkar are with us. They've been answering your questions, which you've been sending in. Markets, of course, if you're just joining us and you've not looked at markets all day, had another disappointing session. We were down 40 points on the day, but we were down almost 100 points from the day's highest level. Well, we get to the fourth big story of the day, and this is Sun Pharma. Sun Pharma gained in trade, but of course came off quite a bit from the highs. It's had a major breakthrough. The company has received a much-awaited US FDA approval for a specialty product in the biologics space. This particular drug is expected to rake in between $300 and $500 million annually in peak sales, essentially. The most it will do during the period that it can sell the drug, that is Sun Pharma. Ekta Batra broke that story. She's now joining in with more details of this. Ekta, go on.
Well, yes, definitely positive news came in for Sun Pharmaceuticals. It was quite a milestone approval for them that they received for their specialty drug segment. They have received approval for Tildrakizumab, which they will be launching as a branded drug in the US market for psoriasis. Now, it is expected to be quite a competitive market already. The market size is expected to be anywhere between 8 to 9 odd billion, growing in single digits, but there is already competition existing in this particular space. So Sun Pharmaceuticals is expected to probably not do as much in terms of market share. So there are some estimates which range anywhere between 5 to 10% in terms of market share, as well as the sales which they could do in terms of peak sales for this particular drug ranges anywhere between $300 to $500 million in the next 2 to 3 or 4 years. However, the important thing to note is that they are making forays into the specialty segment, so that bodes well for Sun Pharmaceuticals, especially at a time when there is generic pricing pressure in the US markets.
Thank you very much for that, Ekta. And we have questions on Sun Pharma, I assume. Yash Upadhyay has called us from Uttar Pradesh. Yash ji, thank you for calling. What is your question?
Thank you for this call.
Yes.
And I'm holding Sun Pharma more than 1 year at the rate of 573.
G.
But since then, I'm holding, my perspective is also long term.
Okay.
But this stock is always going up, then coming down. And again going up with some news comes. Now again one news is there. Again it will go up. I think we are playing with traders, or I don't know.
Yeah. Okay. So you want to have a long-term view. I take your pain, sir, sitting on a bit of losses, Prakash. He's a long-term player. So does he stick with Sun?
So as a matter of disclaimer, I do have Sun in my portfolio as well. And I fully understand, given the trajectory that the stock has had on its way down. In fact, it's made such lows that people were actually almost ready to give up on it. And then, you know, this whole thing of the Halol USFD inspection built in expectation from almost as early as November. And finally, that inspection has happened. There have been some observations. Now, whether they get a clean chit basis the clearance of those observations, the remediation getting over, that would probably take 3 to 6 months. So, you know, that is what will probably change things for this company, Mr. Upadhyay. You will have to wait a bit more. You waited patiently for a year. 12 months to, you know, another 3 to 6 months may not hurt too much. But I think the company will the stock will kind of start reflecting the re-rating of the business. And this approval today that's come, it's probably a slightly longer term in terms of a positive impact. And that's why you didn't see the stock holding on. You know, it started in the green and then, I mean, it lost some ground. It probably ended in the green, but it lost a lot of ground in the day. Don't be disappointed. You'll have to stick to it. Keep the faith. My sense is it will be probably 650 to 680 in a year's time, a year and a half's time. So which is another 18 months from here. You could probably start looking at exiting once, you know, it's in that positive territory for you.
All right. So there is Sun. We'll have to wait for some constructive moves there. The final headline of the day, the rise in alumina prices drove companies like Nalco, that is National Aluminum, Hindalco and Vedanta higher in trade today. Nalco was up about 7%. Vedanta closed over 2% in the green, while Hindalco was up about 1% or so. Nigel is here to tell us essentially what's happening globally. This is a global-facing sector. And then we'll listen into Nalco's CMD, TK Chand, on his outlook for aluminum prices as well.
Well, alumina prices did surge overnight on news that the world's largest refinery, that's Knox Hydro, could be effectively facing a prolonged shutdown. Now, why is the Knox Hydro alumina refinery very important? It's the world's largest refinery. It has a capacity of more than 6 million tons. And most importantly, in fact, now the Brazilian authorities, they have said that nearly around 50% of this capacity will have to be shut down. Why is that? Because during heavy rains, we did see some water leakage at their plants. Macquarie, they're analyzing the impact. They're saying that, in fact, this could be for a period of around 2 months. It can get extended to even 6 months. And effectively, close to 6 to 7% of the merchant market could get affected. Well, Nalco was running along because more than 80% of its EBITDA comes in from alumina. And that's why, in fact, Macquarie, they did say that they're fairly positive on alumina prices going ahead. And Nalco could be a potential beneficiary.
At the start of the month, price was somewhere around $350, $355, and it has moved to now $390 and $400. So there has been a significant increase in the market in the alumina prices, mainly because the Alunot, that North Hydro's one of the biggest refinery, they are facing the problem relating to the red mud overflow, and there is likelihood of the production getting caught or it may be shut down.
All right. Nalco up about 6 to 7%. Varun Patel has tweeted a question on actually Nalco and another company, REC. He has 500 shares of REC, which he purchased at 150 rupees, 800 shares of Nalco at 74 rupees. Short-term investor wants to know what's the view on these stocks. Okay, wide variety. Mitesh, short-term view.
So I think Nalco has hit a very important support levels closer to about 62, and there's some good news as well. So I do expect a bounce back to about 75 to about 78, which could give an exit at least at the just above its cost. I'm not looking at a big rally developing over here. So I think around 75, 78 is what I would suggest. And the other stock is?
REC. Yeah.
That's right. Looking at this chart, I think the declines might not yet be over. I think it's closer to about a mild support at about 122, 120 odd levels. If it breaks that, I would suggest an exit. I think the stock could even correct about 105, maybe closer to about 100, and then we see some base building.
Okay, so that is REC and a view on Nalco. We've got our viewer, Paramjit Rai Singh, who's got a question on Hindalco. I mean, he's got 450 shares of Hindalco. He's paid 101 rupees each. He's been holding for the last 2 years, and he wants to know whether he should hold or sell. I mean, of course, the stock has climbed down from its peak, but he's still
in the money.
Absolutely, still in a fair bit of money. What would you tell him, Prakash?
I think it's a hold. There's no reason to get out. In fact, just out of the 3 stocks that we discussed, Vedanta had already seen a run-up because I think a couple of days back it went ex-dividend, and you know that's why you didn't see so much of improvement in the price beyond that. Nalco has benefited because it's got in a unique position of sorts. But Hindalco also has a positive trigger if the US economy, the way it's shaping up, the Novelis business will, so on a consolidated way, that's going to finally contribute much more. So I think he's done a smart thing by buying it, at the right time, and that improves his risk-reward ratio very favorably. So sit tight on it. There's nothing to worry. It could probably go back to the earlier peaks that